Okay, got a short video of the market outlook for Sunday, May 4th. And let's just take a look at it here. Now we're looking at the Dow right now, DIA, and this is the daily chart. Let me point out here that this is where we're at right here. We're hitting against the 50-day moving average. Let me go over the indicators here. I use the 200-day moving average, the 50 right here, the green line being the 20, and then the white line here is the 5-day moving average for my entering my swing trades. And then below here I do look at some of the volume. Here's the RSI 2, and below that's RSI 5. So these are everything that I use here, in addition to the VWAP from time to time as well, to look for how far we are from the bulls and bears. You might say the borderline, which I'll mention a little later. Okay, so now that we've gone over that, you can see the trend line coming down here. I got two trend lines. You got the major trend line, meaning it's coming from the very top, coming down. We broke above it, which is a good sign. We hit our heads right on the 50. Could be getting a pullback here, unless some kind of really positive news comes out. Then we could rally up to the 200, but most likely we'll probably get a pullback. We do have a gap fill down here that eventually that we may have to come down and fill, which I maybe from when we bounce here, bounce to the 200, then go all the way down to the gap. Who knows? But this is something to keep in mind as far as looking for pullbacks. And we do have a head and shoulder formation. As you can see here, the shoulder, head, shoulder, and we get that measured move here. We have a measured move of 11% at the 444 range. Okay, so going to the SPY, we have a similar pattern as well, very identical. And you can see the larger trend line here. We did break above it, heading up higher. We did close above the 50, and we're a little closer to the 200 right here. So we may be reaching the 200 by Monday or Tuesday, and then maybe we'll get the pullback to the gap. Maybe we'll get people that will be buying the dip, or it may just continue down to this gap here that we needs to be filled eventually. Volume has kind of been a little under normal. You can see it's drying up a little bit, while the RSI we're very overextended. So I would not be adding new positions up in this area here. We did have a pretty good straight up move here, so now we got to just let it digest the gains and pull back before the next leg up. Going over to the Qs, very identical. Pretty much all the patterns are alike. We got the head and shoulder here, and then we also have the larger trend line, which we broke. We had a pretty good straight up move on the candles. We did touch the 200-day moving average here. We do have a small little gap that we could be coming down to, or even all the way down here to the 447 gap before reaching to our price target around 517, which is a 14% gain from the break of this neckline here. Going over to the small caps here, the weakest one of all, you can see it's trying to do catch up here. You got the major trend line right here. This one is still the furthest from the trend line, still under. It did break above the 50-day moving average, which is good. The shorter term trend line, which happens to be also the neckline, it has broken up and it's continued up here. We do have a price target, which I see that I don't have it written up here, so we're going to go ahead and enter that right now. We're going to put a price target of approximately from there to there. The day that it broke above is right there, so about 14%. So we're looking at around 220. Around, that's our price target, just slightly above the 200-day moving average. If disclaimer here, if we do get a head and shoulder pattern, we do have a one shoulder. We got the head, but we do not have this shoulder completed. So depending on the angle of the neckline where the shoulder starts forming, then we'll have to readjust this. So go ahead and we'll just discard that my mistake. And so I'm a little premature trying to measure that at this moment. So we're looking for a pullback, maybe hopefully to the gap, and then we'll get the bounce, and then we'll get the break above the trend line, the neckline here, and then we can get the accurate measured move up where we can anticipate the price will take us to. But this is good news. This is forming and looking good. So it's just a matter of keeping an eye on it. Now let's go over to the semiconductors. Now the semiconductor does have a head and shoulder formation. As you can see here, shoulder, head, shoulder. We broke the neckline. Now we're up above the 50-day moving average here. We do have a way to go to the 200. We do have a price target of 19% at 245 from the break of this neckline here. So we may get a pullback and then eventually head back to the 200 or this price target. Going over to crypto here, Bitcoin, using the ETF BITO, and you can see here, here's the larger trend line that we need to break above to correct the trend of Bitcoin. We did have a pretty good move straight up above the 50. We practically touched the 200, which we may or may not have touched the 200. Oh yes, just need a little bit. And then we also have the larger trend line. So we have a lot of resistance here. For whatever reason, if we do gap up, we'll or jump over this trend line, which can happen, we will probably head up to this gap fill here before pulling back. So that's just something to keep an eye on. We do have a gap down here at the $18 level. That would be nice to see it come down, touch, and then continue up, and then we again have another head and shoulder. So a lot of head and shoulder formations coming up and forming. So that's a good sign, at least for the next 2-3 months ahead. Going over to gold, you can see gold has pulled back for a while. Yeah, it's still above its major trend line, so it's still, the trend is still up. It's just looking for a pullback. The question is, how far back is it going to pull back? We do have a gap fill here, and here, as you can see, the price is 278, 285, 293. So it's just a matter of keeping an eye and see where gold was gonna, where the buyers are going to be to lift gold up higher. Going over to the oil, you can see the oil still on the downward trend. Here's the major trend line here, and we do have some volume coming up here on this candle right here. So there are buyers coming in thinking that this might be a good price, looking for a bounce and close above this trend line. Then we got this gap to consider to get a gap fill. Maybe we'll get pulled back and then head up to the next gap. But this is just something to keep an eye as well. It's still under the 200, so it's something, if we trade the oil, to be conservative, you just keep a small position because the major trend is still downward. And then looking at the RSP, which is the S&P 500 equal weight, so you can see this has a better representation of how the whole S&P 500 is doing, and you can see it is above the 50 and it's maybe heading to the 200 next few days, or we can get a pullback here. We do have a gap fill right here at this line. We could bounce down here, and then we'll have a head and shoulder formation as well. Currently we do not, so maybe that's what we need to see this form before we can consider going into swing trading here. And let me just draw in the major trend line here. See, you got the major trend line right there. We just broke above it. So if we do hit the 200, we may be pulling back near the trend line and then before the next bounce up. And that's pretty much it. All right. Take care and see you guys next week.